Some people view making their initial call to their mortgage professional similar to that as visiting a dentist. Most of the angst associated can be relieved with simply understanding some of the basic information you need to know before you call. Come along with us and let's talk about some of the options and why you want them. How are you, Carrie?
I'm doing great. How are you?
I am very well. I'm taking on a topic today that's near and dear to my heart since I did mortgage lending for around 10 years. Did I say that? Yeah, I did say that.
You did say it. I heard it.
Yeah. So really, when people go in and jump in and start talking about going and getting approved, they're typically talking about what kind of approval do they need? And do they need a pre-qualification? Do they need a pre-approval? Or this other type that's been around for the beginning of time. And some people are billing it as, oh, we just heard about it, or oh, it's just now available. And that is going to be what is called a full credit underwriting approval. And there's three distinct things there that we need to jump in and talk about some today. What do you think?
Yeah, that's true. These are really important for home buyers to understand, and they're also important for home sellers to understand.
Absolutely. And I firmly believe there's some agents out there that don't even understand it. It'll be great. Maybe that agent or two will pick this up and go, I didn't know this, but pre-qualifications and pre-approvals are two of the types of mortgage approvals, which speak to the specific steps that a lender is going to take when it comes to finding out how much somebody can afford for a mortgage. And a lot of people say, oh, I got pre qualified and I'm good. I don't need to talk to anybody. Wait just a minute. You're not. So I guess we probably need to talk about the three different kinds that we're talking about and then maybe talk about ways to choose a mortgage lender and what else? Maybe we'll do some Q&A. What do you think about that?
Ooh, Q&A. Love
Yeah.
Q&A. Yeah.
So I got some people that may text me some questions here. Maybe we'll have them come through. But let's tackle pre-qualifications. And this is one of the things that I see a lot of people get confused with pre-approvals. And they're completely different. That's the crazy thing.
Right. Yeah, definitely not to be confused.
Yeah. A pre-qualification, of course, is going to be the most basic step when it comes to getting approved. And I don't know if people have been into real estate as long as I have been. They have real estate calculators and they have qualifier pluses that will help you go in and figure out how much a home buyer can afford. And yet, no, I don't do it. And there are some things that we need to really talk about that so you'll understand why so many agents and sellers are asking for the specific type. But back to pre-qualification, it's the most basic step, right, Carrie?
Right. Most basic step. It's the first step that a lot of people are going to take. And it's going to be estimated from, and this is really important, self reported income and savings.
Okay, self-reported. Everybody understands that. Everybody hears that. So I say I have this much money cash. I say that I make this much money, and I say that I've worked at this job for this time, and I'm going to tell you that my credit is this. Does
Yep.
everybody underestimate? Pretty much they overestimate, right? And
Right.
many Americans don't even know what their credit score is.
That's true.
That's an important thing too. But the lender isn't going to be looking at or verifying any type of employment records when it comes to a pre-qualification. It's all self-reported. And like those stated income loans from back in 2007 to the 2008 crash, it can get us in trouble. But there are some things that a lender will look at, and we're going to jump into that now. Carrie?
Yeah. So for the pre qualification, the lender, and it just depends on the lender what they're going to do, but they may run a quick check or like an informal inquiry into what your credit rating is. They're going to get some very basic financial information. Again, this is all going to be self reported. So basic, very basic stuff. And then they're going to estimate how much they think that you can afford based on all of this self reported stuff that they've got.
We
Um,
always make estimates, don't we? Tell me.
yes, give me a real number.
Absolutely.
Yes.
What about their income and stuff like that?
Yeah, so that's all gonna be based on the self-reported stuff. Whatever income that you say you make, the lender's gonna take that and make their estimate based on that.
So, what about turnaround times for a pre-qualification? Is that something that can be done pretty quick, or does it take a long time?
Yeah, I've seen most lenders offer it within a day, even faster than a day sometimes, even within a couple of hours, because they're not verifying anything. They're just asking you a lot of questions, getting information from you. And so they can do it really quickly. A lot of times you can even go online to various websites or various lender websites and just get something automatic there.
So pretty much you're telling me that this is just an estimate. This is going to be self-reported, which is very clear, but the situation is nobody verifies it. And so it's not, if you get a pre-approval, it's going to be different than this pre-qualification, right? Pre-qualification isn't going to be worth the paper that is written on.
That's one way to put it. Yeah, I would agree with you.
Which is frustrating for many people because they think, "Okay, I got pre-qualified, so I'm good."
Yeah.
No, you still don't know. It's still not set in stone, and I personally do not like them, do not trust them, do not want to work with them because it's not it sets you up to fail, in my opinion. It gives you that initial, "Okay, I could go here," but without going a little bit deeper, you don't know if you're really on the right track or not.
And it gives you a lot of hope without that's not based in a lot of solid information. So
Yeah. I guess this is basically what I'm saying is this is the WebMD of of diagnosis. Would you agree with that?
I would totally agree with that.
Yeah, the WebMD. Oh my gosh, I've got a scaly patch. We get on WebMD and you're dying. And then
Right.
then the doctor and they said, hello, let's scrape it off or something and you're fine. But it does happen. So the other form, is basically the pre-approval. And the pre-approval, of course, is a little bit more of an advanced step, but it's not the top of the line. And most people think it's the top of the line, and it's not. And during the past COVIDs in 20, 21, and 22, when the housing market was really at a fast fury and people didn't have cash to compete, we went with the third option, which is the full credit underwriting approval for a specific reason. And it's a little bit more advanced than the pre-approval. But let's jump into the pre-approval and let's talk about what kind of information does the lender collect and what do they do with it? Because there is a big difference than the pre-qualification.
Yeah. So for the pre approval, the lender is going to get a more advanced level of information. They're going to look at your exact income. They're going to verify that income with actual documentation. And for the documentation, we're talking about like pay stubs, W 2s. They're going to pull and they're going to review a full tri merge credit report, which is a credit report that has data from all three of the major credit bureaus.
Yes.
So with just those two things, they're already going to get a lot more information, a lot more verified information than what they got in that pre qualification step. They're also going to verify your employment. They're going to review your financial documents. So, that again is going to go back to like paycheck stubs, bank statements. They're going to look at investment accounts, what you have in savings, what you have in checking. They're also going to look at your debts. Then they're going to get those from your credit report. And they're also gonna look at a whole lot of other stuff.
Yeah, some of the other stuff they're going to look at is going to be any debts or income that you get from child support. So if you have to pay child support, it's going to need to be documented. If you receive child support, it's also going to be documented. Any divorces or life affecting settlements. The thing that trails you with a divorce is the decree. And that decree you have to have basically forever and ever. Because when you get into major financial decisions after a certain period, you may not need it. But if there's any questions regarding debts that haven't been solved that were obtained during the marriage, if they haven't been paid off and they're still current, you may actually have to use a divorce decree to verify that you were not responsible for that. But I said life affecting settlements because if somebody is getting any kind of settlement that's paid out over a number of years for injuries or accidents or anything like that, or disability, you may actually have to document that as well. And unfortunately, they're going to really need to see any kind of bankruptcy documentation that you filed in the past. Now, some of this they're going to ask about and they're going to want the documentation for later, and they're not going to really dig through it, but it depends on how detailed they're going to be, because some will throw out a pre-approval based upon a smaller amount of information and some want a little bit more detailed. One of those that are going to want more detailed is if you are self-employed, because if you're self-employed, they're going to want to know that you are in the same industry for the last 2 years. And typically with any kind of pre-approval, once you get into the underwriting stage, they're going to want the last 2 years of your tax returns as well. So all of these financial documents and pay stubs and everything that Carrie mentioned is going to create that picture that they're going to need to really know what you can afford and what you can't. And all of those kind of come into the calculation of a front end ratio and a back end ratio that affect what you can qualify for in your housing. So depending on how detailed they are, it's going to depend on how much they're going to dig and need that documentation up front. But it's all designed to really confirm what you can get approved for. Now, how long does it take, Carrie?
It definitely takes longer than your pre-qualification, and it just depends on the lender. It can take a few days, it can take a week. It just depends because they're going to do a lot more verification and they're going to ask a lot more questions than they are in that pre-qualification. But at the end of it, you should be able to get some confirmation of what kind of loan you can be approved for, what full amount, and some more details than what you got in your pre-qualification.
Yeah. And typically the average agent will stop there on their pre approvals and they'll be like, okay, this is really all we need. But in the mortgage market and in the real estate world that we have seen in the last couple of years, we've had to really take our buyers who didn't have the capability to pay cash and give them a competitive advantage and get in. It's really great for a lot of reasons. It's not just a competitive advantage, but it can solve some of that angst that you have as well. If you look at something like a full credit approval, and lenders can do a full credit approval. And this is where they take all that information that they've collected for your pre-approval and they basically submit it to an underwriter to look at it. So what they're going to end up with is an approval based upon their borrower or our buyer client and come up with the amount that you're approved for. So you just have to add in a property up to that amount and they have to get the property approved. That's it. Because you've already gone through submitting all the documentation and the underwriters looked at it and they have fully signed off on this. And it's critical because that additional documentation includes the formalization of any kind of employment letters or employment verification. All of that is taken into account. Divorce decrees, everything is dug through. And this is a great way for a buyer to have the complete confidence that they are going to be able to purchase a home, because nobody likes egg on their face. Nobody likes it when they get three-fourths through through the process and they don't get approved. And one of the things that people don't know when it comes to lending is most of the issues are headed off at the beginning if it's a government loan, like a VA, FHA, USDA. But a conventional loan, most of those issues that present themselves are at the end. We've got to take that into consideration. For a full credit underwriting approval, Carrie, how long does it take?
It definitely takes longer than the pre-approval. And
Yeah.
again, it depends on that lender and what their underwriting department looks like. If they have a large underwriting department, it may be a little bit faster, but if they have just a few underwriters, it may take a little bit longer because they're really like you said, they're really going to dig through that information and they're going to verify things and just do double and triple checks so they can actually give you that approval letter with your expected interest rate and your loan number.
And it's critical for all of that because if you don't know where you've been on your credit or your income, or let's say you even have a situation where you get bonuses, how much of that bonus can you count on in your income? And it makes people feel a lot safer. And one of the things that you can really benefit from is having a realtor who understands the difference between these and the negotiation standpoints that it can present you with. Because if you get a full credit underwriting approval, guess what? Now it's going to be approval with conditions. They're not going to be like full off. They're going to have already put everything and looked at everything. But if something changes, then they're going to say, we can't do it. But it gives you the capability to purchase very similar to that of an individual paying guy because you don't have to have that certain number of days to apply for a loan because you've already done it. And that's one of the brilliant things with getting a full credit approval. And typically lenders don't like to offer this because it takes time and money and resources because an underwriter has to dig down into a file. There are a lot of times that's really beneficial.
And a good lender will be willing to do it because they know that they're setting their clients up for success when they give them that full credit underwriting approval letter. They know that their offer is stronger when they find the home that they love. So
That's,
the lenders will do this for you.
yeah. And if they tell you they can't do it, maybe they're not the right lender for you, which does happen. Some people like to rear load all the work that they need to do and not do that up front. But we have access to some great lenders. And there are some things that we probably need to give you some tips on. And maybe they can help you work with your realtor to find a lender that is the best for you because there's a lot of them out there. There's fewer today than there were last week because there's been a lot of layoffs on lenders. But well, let's get into some 7 tips for choosing a lender. Carrie, you want to take us through it?
Yeah. So tip number one is my favorite one. Ask your agent for recommendations. Your agent is probably going to have a list of lenders that they've worked with, and they're going to have experienced the process and the service and what various lenders have been able to do for their clients. And they're going to have some recommendations. They're going to be able to point to some really great lenders that can really get you into the home that you want, set you up for success there. So yeah, tip number one, ask your agent for their
Or
recommendation.
those recommendations. Yeah, because an agent's going to play a pivotal role, especially in knowing whether that lender is going to return phone calls. Because
Right.
sometimes lenders like to hide from their phones when something isn't going right till maybe they can get it figured out, or they just don't want to deliver bad news. And it gets frustrating, and you need someone who's going to pick up that phone. And having a realtor who's worked with tons of lenders over the past 6, 8, 10, 12 months in specific, not only years, but the most recent levels of experience is really going to matter because it does help you know who's going to get you to the finish line. So, Carrie, what would be our second
So tip number two is get the rate and the terms in writing.
in
So
writing? You mean I have to have it in writing? Oh my gosh. Can that
yeah,
be, can that be over a text message?
I would prefer that it be in a letter of some sort,
Yeah.
to just make it more official. Most lenders will have like an official letter that they can give you as part of the process. But if the lender can't give you a quote in writing, that's probably a red flag.
They should be doing that initial closing disclosures out to you so that you understand how much and what it's going to cost to borrow that money. Yeah. And if they won't do it for you, it's probably going to be the one you want to avoid. And there's a lot out there, right?
Yeah, that's true.
So, what would be the third tip for choosing a lender?
So once you found a lender that you feel like talking to, you want to share your main mortgage goals with them. And then you should wait for them to offer you suggestions on a mortgage that's going to help you accomplish those goals. Your lender is there to help advise you and help counsel you through the process. If they're not willing to do that, if they're not willing to listen to your goals and help match you with some type of loan that is going to help you achieve those goals, then their service is less than what you deserve. You deserve a solid team working with you when you're shopping for a home, and that includes both your agent and your lender.
Yeah, totally agree with you there. What about the fourth tip?
So you want to try to predict how accessible your lender is going to be during the loan processing. And that means asking things like how the loan's going to be processed and who's going to be there to be able to answer your questions. Do you get a direct line? One of my favorite lenders actually sets up a group text that includes me, my client, the lender, and then anyone else that's working on the loan who's on the lender's team. And we just group text through the whole process so everyone's kept informed the entire time. If you can't get a direct line to your lender as far as just having a phone call, you may have difficulty reaching them when you're in the process of buying a home and you need a question answered immediately, which does happen. So make sure that it looks like you're getting with a lender that you're going to be able to talk to when you need them.
Absolutely. What's tip number 5?
So verify that lender accessibility that we just talked about.
Oh,
Um,
verify it, huh?
but yeah, make sure it actually works. So during this process, ask the lender that you're interviewing for a callback number and then go back later, make a call, see if they get back to you, see how long that takes. If they're hard to reach during the process of interviewing them before you actually choose them to get your home loan, it may be even harder once they actually have your business. So,
You're testing them.
yeah, test them. Yeah,
Okay, that's pretty good. I like that one.
yeah, yeah.
What is tip number 6, Carrie?
So ask the lender about their processing support. If they do their own processing along with taking loan applications and prospecting for new business,
Yeah, and a lot of people don't understand that there's a lot that's not understood about the lending world, but when it comes to processing support, it really does matter. And we have lenders from mortgage bankers, mortgage brokers, and all different varieties. A mortgage banker may have a bigger operation, or a mortgage broker could have more access to really sharp processors to help them get all the documentation in. And the processor is really going to help you and help the loan officer collect all that documentation from you so that they can put the file together for the loan officer to review and to submit to the underwriter, because you want to get as clean of a file as possible so that the underwriter can have a true condition. And condition is something that they need a question answered or more additional. Carrie, what would you say our seventh tip is for getting a good mortgage lender?
so I'd recommend that you confirm their processing times. See how long it's going to take them to get you that pre approval letter. See how long it's going to take them to get you that full credit approval and see how long it's going to take them to get everything approved once you have selected a home and you get into a contract. If they can't promise you a specific time period or a specific date, and if they can't promise that they're sticking to a specific deadline, that could put you in a bad position as far as when you actually get into a contract to purchase a home, because you're going to have a whole set of deadlines that you need to make. And you're going to be having to work right alongside with your lender to get to those deadlines.
Yeah, we like people who are Johnny on the spot and really get things done, but also we don't want someone that's totally overworked, because that's when accidents happen. They can't get deadlines met. And the lender is critical for the success of the transaction. They
Yeah.
really are. I still have a whole lot of great friends that are in the lending community, and I love them a lot. And they get beat up a lot of times, and because they're having to collect this, but it's really important for a buyer, or on their end, a borrower, to understand that they're trying to put you in the best light underneath the microscope that the underwriter is going to be looking at your file with. And they didn't get you to the point where you are now. If there's things or blips on your credit that they need a letter about or something to work around or explanation for something or additional documentation, it's because of things that have happened in your life, not theirs, that they need to explain. And so it does matter. And you have to just really work with a lender and get them the information they need tip top quick as possible. And that really can slow down the entire process is someone's inability to work well with their lender. But I actually have, yeah, Carrie, some text messages coming through, which is
No.
interesting because this time I'm going to hopefully sync this so we can get some things across the screen. But one of those questions that we're getting is, when do you need to talk to a mortgage professional? And this is
It's a
really one
great
of the
question.
big question because I'm going to throw out as quick as possible, as soon as possible. And as a as a real estate broker, anytime somebody says, "Oh, I'm going to find the house before I even go through getting mortgage approval,"
No,
it's not how it works.
no.
And sometimes they think, "Oh, I need to be inspired." It's not how it works.
No.
And for me, it's very important to work with clients who are pre-approved at the very least, not pre-qualified, but pre-approved with a really good lender because it sets you up for success. And if you understand that when a realtor is representing a seller and a seller is opening their door to buyers to look at this home just to purchase it, we need to be a little bit more discriminating on who's walking in those doors. And I think that is something that it really does matter that you do that in the beginning, straight up. The first thing you do after start working with a realtor is talk to a lender. One of the things that you're going to want to know concrete is going to be the amount of home you can get approved. And there's nothing worse than showing someone $700,000 houses and all they can afford is 500,000. And you think, oh, that's no big deal. That's just a minor problem. It is a big deal. And you could change those numbers and make it 200,000 versus 400,000 or 300,000 because the homes in those markets are completely different. And if
Right.
you start too high, those $700,000 homes, heck, let's just make it 1,500,000. Those homes in the 1,500,000 market are completely different than the homes in the $500,000 market, right? Yeah.
Absolutely.
It's a harder thing to understand on why is this home look so crappy compared to that home? There's $1,000,000 in between. So it's going to speak to condition and what you expect and the neighbors. Everything's going to be different. So it's really important to get that information up front.
Sure.
So, Carrie, this one looks like a good one for you right here because this one is actually, do I want a team or an individual? And I think what they're meaning
Mhm.
is when it comes to finding a mortgage professional, do you want somebody that works as a team or someone who's like a one man show?
That's a really good question. And you know what? I would say it depends on the person. It
It
depends on you. Both
100% agree with you.
both are great.
Yes.
If somebody has a team, if a mortgage professional has a team, then obviously they're going to have more people that are working together toward the same goal, which is always a helpful thing. It also may mean that you're often talking to one of the other team members instead of the lead mortgage broker.
Very,
And a lot of times that's totally fine. There are some people though that would prefer to talk to one single specific mortgage broker through the whole process. And if that's you, if you prefer to have that one person that you're talking to on every phone call that's handling everything, then maybe you go with an individual instead. And I would say it not only depends on you as the borrower, but it also depends on the specific team and the specific individual.
absolutely. And you're not going to know that till you really talk to them about how they work, who you're going to be talking to on a continual basis. And for some people, they don't mind that. They love it. It's okay, just somebody take my call and y'all all work together and stuff like that. And I
Right.
have totally seen where people want to talk to the same person over and over. And when I've had assistants and people help me in the past, I've always wanted to make sure that, and it's going to always continue this way. They don't talk to my client
Right.
because that communication, it's horrible to find out last and not in the beginning, something that you could have helped steer a different way, looking out for some of that. And nobody has the experience like somebody who's been doing it a while, and your support staff definitely doesn't always. So that's a really good question. I really like it.
That is a good question.
Here's another one. What mortgage lender do you speak with? Well, this kind of goes along with the team and individual. Yeah. Do you think? But
Yeah.
a step further. That's a good question.
Yeah. It's a really good question.
Yeah. I'm going to tell you it's going to depend on where you are, because you are always going to want to work with a local lender. And no shame in the game against the people who operate totally off online situations. And you can have somebody that is in another state and they don't completely understand how it works in Texas.
Right.
And no, they could be licensed in Texas, but they don't do enough of them. There's more learning the principles and how things are handled and then doing it and learning the tricks of the trade, right? When it's more local,
Right. Absolutely.
it's really going to make the seller and the listing agent feel a lot more comfortable if it is going to be somebody that they can get or you can get in front of. And if need to be, get your hands around their neck and go, what the heck? Where did you fall off? And something like that. It makes a big difference. They always shop local, and I've had people come from their states, and we're already pre-approved. And it's great. That's wonderful. However, you need to talk to somebody here.
Yeah. I really appreciate our local lenders that we have that are operating in this market. The other thing that is really great about using a local lender is they have a lot of local contacts. So all the people that you need to act quickly once you've selected your home, like your appraisers, your surveyors, all those other people that need to be part of that process, a local lender is going to have a list of people that they can call that can be out quickly.
Yeah, and that does matter. It's critical to have somebody that understands what all the issues could be with getting those third party vendors out there that a lender is going to need, especially appraiser, getting an appraisal management that's going to meet the timeline that's out there. And really, the lender and the title company are going to have to be on a good working relationship. And sometimes when it's just one of those 800 mortgage companies online, it's just they close at 5 and you can't get somebody on the phone. You're not going to have the lender's cell phone number, and that matters. And if you're calling into a toll-free number all the time,
They
you're
may
not.
end up being a different time zone too, which can lose you a really valuable 1 to 2 to 3 hours, depending on where you are in the country.
And a lot happens after 5 o'clock, right?
That's true. A lot.
So when you think about a lot of those phone systems go down at 5 or 6 p.m. and you can't get through and you don't have a direct number, and the people are hiding behind the email, you can get
Yeah.
to be a little much. I can tell you that a lot. Okay. Why does your agent always ask for this documentation?
Mm,
That's a good one.
good one.
We've talked about this a little bit, haven't we?
Yeah. Yeah, definitely. You certainly hit on this as far as who we're taking into homes and
Yeah.
how we vetted them. And as far as starting the process of searching for a home, once you realize that this is a goal you have, you want to start getting the specifics nailed down. And this is one of the very first specifics is what do you want your budget to be? Which may not always be the exact number that you're pre-approved for. It may be less than what you're pre-approved for, or it may be exactly what you're pre-approved for. But either way, you need to know what kind of loan you can get before you decide what your budget is and then look for houses in that budget. Otherwise, you're wasting a lot of your own time.
Totally agree with that because it does matter. And I've had a little bit more of a comfort level working with somebody who has been pre-approved. And,
It means they're serious.
not only are they serious, but it's like somebody else knows who they are, because in real estate's
Oh,
brilliant and it's wonderful, but we're always meeting people that we don't know. And they're not always referred to by our favorite person. And we don't have a friend in common. It's nice to have that as a second point of really checking out these people.
yeah, that's a really good
We're
point.
going to take, I'm trying to pick really one more question because we've got several that people are just texting me.
Awesome.
I know. I don't
Love
mind people
questions.
texting, but come on. Here is the last one. Let's pick this one. This is one we're going to pick. So, why do sellers prefer one type of letter over the other? And this is a big one. Sellers are many times in a stable or seller's market, sellers are still running the show. Why do they prefer one type over the other, Carrie?
When you're selling a home, you want the offer that you accept to be a secure one. You want it to be one that you feel is going to get you to the closing table and get you to successfully sell that house. And the more security you have in that offer letter, the more security you have in the fact that person's actually going to get the loan that they say they're going to get and be able to purchase the house at the end of the day.
Right, because there's some negative benefits to taking a house off the market for somebody who can't actually complete the purchase.
Right.
It affects your market time and can also affect questions of the condition of the home just because someone wasn't financially fit for the purchase. And it can be crazy, but as a seller's agent, I want to see a pre-approval letter. I want to see that full credit approval.
Right.
Those are the ones I want to see. And because those are the ones that my sellers want to see. They want to know that there's not a question.
Yeah.
And
No,
they
the fewer
right?
surprises, the better.
Yeah, a few surprises. And really, I think in setting yourself up for the most success is really what it's going to be all about because it's embarrassing to get the egg on your face and I guess you can lie and come up with a reason that you didn't get the house, but you still didn't get the house. And maybe it's a house that you really love. There's that too. But I say a lot of the times the path of least resistance is going to be the best. And just make sure you have one of those and check with your agent and see who they're going to refer you to. Typically, in this day and age, we're doing what, at least three. I know we've got a
Mhm.
site that we just combined all the names in and say, hey, here are some of the ones we worked with that we really consider one of these and go look and talk with other people.
Right.
Because sometimes a referral is a great way to find a mortgage lender.
It
And,
is.
it may be from your mom or your dad or somebody at church. Never know.
Yeah. Somebody that's worked with them and had good success is always a good resource.
Yeah, I'm working with one now that I've never worked with in the past, and it's been a great situation, and I've really liked her, and she's been Johnny on the spot. Yeah. It's setting your clients up for success, which is the thing that matters. So, thanks for watching, I hope or listening to us today. Hopefully you will subscribe our feed, and we look forward to catching you on the next time. Have a
Yeah.
great rest of the day.
Thanks everybody for being here.